Well, we're looking at the trends in M&A activity for the calendar year 2014. An extremely strong year for M&A in China. I think 55% up in terms of the number of transactions that we saw, also 55% up in terms of the value of transactions that we saw, records in nearly all categories of M&A, and they really are quite extraordinary numbers. That level of growth, I think, in all of the years that we've been surveying the activity around mergers and acquisitions in China, we've never seen those kind of jumps. So very, very strong across a number of sectors. The private equity industry actually also has had a very, very strong year in China. So we've seen very strong growth in the number of private equity deals, and in particular in the size of private equity deals. So it's been a good year in many ways for private equities. Part of the drivers for that growth were outbound M&A, driven by private equities locally based in Hong Kong and in China, and some of the bigger transactions have been outbound transactions. We've also seen the private equities participating in some of the SOE reforms, and again that has given them the opportunity to put more money to work. There were 15 private equity sponsored transactions in excess of $1 billion last year. That's a big number. Not so many years ago there were perhaps none or one or two private equity deals of that kind of scale. So in many ways it's been a very good year for private equity. If you ask me what the challenges are, a lot of that is around exits. So there is and continues to be quite a big overhang between what the private equity industry has bought and what it has been able to exit or sell. And there's been a little bit of a problem with the pipeline because of the problems in the IPO markets, the equity capital markets in China in particular. So one of the big issues for the private equity industry is this ability to exit what they bought before. But again, we see that driving M&A activity into the future because we think there's going to be more IPO activity around exits, and we expect to see a lot of M&A activity as private equities either sell to strategic investors and also to themselves by way of secondary transactions. In terms of our forecast, so as we try to look forward into 2015, we get a little bit of an advanced look at this because PwC is working at the front end of many transactions that have not yet been announced. So in terms of our own pipeline, it's as busy now as it's ever been. It's busier than it's ever been. So we see that strong level of M&A activity continuing into 2015. Quite a lot of things that are driving this. So for example, in a low growth environment, domestic M&A, strategic M&A is happening as a source of growth, inorganic growth. You're seeing domestic companies, in particular private-owned enterprises, going overseas in search of technologies and brands and know-how, and then bringing them back as a means to differentiate themselves and grow within the domestic market in China. State-owned enterprise reform is a source of some of the bigger transactions, and we think that it started perhaps a little bit more slowly than people expected, so we expect to see that coming through into 2015. And we've talked about private equity already, but we think it's going to be another strong year for private equity as there's this trend towards buyouts, a trend towards larger transactions, more outbound activity and more activity around exits.